welcome to the Be Inspired series as part of the London Stock Exchange. I'm Akhil Suresh, a member of the investment funds team at the exchange. Today, I'm delighted to be joined by Stephen Lilley, part of Greencoat Capital, which manages Greencoat UK Wind, the largest listed green infrastructure fund on our markets. Stephen, thank you so much for joining me today. Can you take us back 10 years or so when you launched? What were the motivations for the listed strategy?
So Lawrence and I have a background in energy and infrastructure, so we're in the sector we were in, I guess. So we looked at listing in 2011 and got pretty close to succeeding, but didn't actually. And hopefully the wise person learns from mistakes, and we came back a second time around with a much clearer product, if you like, for investors. And so in 2013, March the 27th, we successfully listed the first fund in the sector and created a sector as a consequence. But really our focus, I guess, second time round, thinking about it, really what was the need, was for the sort of three major components, I guess, investors, come back to that, utilities and societies in general. In terms of investors, we were very clear, I guess. The context, I guess, is only a couple of years after the credit crunch, or a few years after the credit crunch. And so therefore, income was a problem, I guess. And so did the investment community have access to income. Also inflation. So, you know, a dividend that we could grow with RPI, kind of important, especially where governments were not necessarily tackling inflation with interest rates, as we all know in the decade after the credit crunch. And then also capital preservation, so an important thing of people not wanting to lose money, which is obviously kind of important, but especially in the context of the background of the credit crunch. So I think those two things, you know, we listed a company with a 6p dividend that we always wanted to increase with RPI, which we have done 10 times. So 6p now becomes 8.76p 10 years later, and that's just compounding RPI, including a 13% lift from 22 to 23 as a target. And then we've preserved capital on a real basis as well. So we've beat that, if you like, by 23% above compounded RPI, which has been about 45%. So those sort of components of a product to investors of a high dividend, increasing with RPI, preserving capital on a real basis, really, really important. Then in terms of utilities, I think there's a real need as the sector gets built out for utilities to have a way of recycling capital so they can go and build new capacity, which we saw 10 years ago. And even more so now as the sector really starts to grow significantly, especially offshore. And the ability to have capital recycled, really, really important. So creating that for that type, you know, for that component, if you like, was massively important. And that's why RW and SSE came into our listing on the basis of creating a market that was helpful for them, and the rest is sort of history. And then for society in general, the energy transition is hugely important. And so a company like ours, we provide power for about 1.8 million homes. We produce about 1.6% of UK electricity. But crucially, we avoid 2 million tonnes of CO2 as well. So I think that's a really important thing. And then if you take all of the capital that's like ours, either the listed funds that come on after us, about the 20 of those, but also all the pension fund money that's decided that it understands how to do this as well, the tens of billions of pounds, that will translate into a lot more green production and a lot more, you know, avoidance of CO2.
And you mentioned it's a sizable business, and I guess part of that is, you know, coming back to market and raising further capital. And you've done that almost every year since you've listed. How has that really enabled you to execute your strategy? Yeah,
the nice thing about listing is that you have a balance sheet, and once you have a balance sheet, you can borrow against it. And therefore, an IPO is a stressful, as I'm sure you all know, because they're a bit like boom and bust. In fact, they're not a bit like, they are that. You know, if you don't succeed, you're not listed. But the important thing of, I guess, of having been listed is you can then go and you can delink buying assets with raising money. And so we've used short-term revolving credit facilities to go and buy new assets, and do that when it's good to, you know, opportunistically good to buy assets, and then come back and raise money at a different time when it's good to raise money, etc. So the delinking or decoupling of those is, I think, is hugely important. And as you rightly sort of say, as we grow bigger, we can have bigger revolving credit facilities and we can do bigger raises. And so the last raise was £450 million at the back end of 20 so nearly 18 months ago. So it's a long period of time we haven't been back to market. Our revolving credit facility is now 600 million, and that's versus an IPO of 260 million. So the size of the business is sort of significant. The benefit, I guess, of doing that is also it means that being independent, we can look across the whole market. So we've bought 6 wind farms at IPO, came into the IPO. We've bought 40 since, so we've got 46 wind farms now across the whole breadth of the UK, on and offshore. We've bought something like 1 in 9 projects that we've looked at, and we've bought from 20 different sellers, be it utilities, developers, funds, etc. The ability to be able to transact nimbly, if you like, and decoupled from equity raising is hugely important.
You touched upon this earlier in terms of the investor base, and how has that evolved? Because you've had the strategic backing of the Green Investment Bank at IPO, and as you've kind of grown further, what type of investors have you been able to attract?
We thought that the Green Investment Bank, which was very sort of nascent, if you like, it was actually something called UKGI, I think it was, before it became the Green Investment Bank. So we were right back in the beginning of that, if you like. We thought that it was a task that the GIB should be doing, in the sense that what it was trying to do was crowd capital into a market. And so we went to GIB, and actually in the end, it went through, for various reasons, it went through Vince Cable's department. So Vince Cable, I think, saw, as he was Energy Secretary at the time, saw the benefit of getting private capital into a new sector, if you like. So he sponsored the IPO with £50 million worth of government money out of £260 million total, which they sold at a profit 2 years later, and had created a sector which has now had over 20 other companies following on from us. So a good use of £50 million, and they got it back, but also as a catalyst created that. So I think that was hugely important.
Yeah, and kind of since you've also listed the focus on ESG and the environmental, social, and governance factors have heightened for publicly listed companies, how do you deal with that and approach that for Greencoat UK Wind?
We'll be slightly less complacent than we probably were at the beginning. We're a wind farm business. What's not to like about that? Joking aside, we've got a good story, I guess, and we have, it's one of the things, like, as well as, the simple mathematics, which has gone very well, is how do we talk about where we might be and how we might help the country and be a go-to green stock, if you like, for people's portfolios. I think that's an important thing. So getting away from we're a wind business, and we do ESG in everything that we invest in, either from modern slavery or from health, big issue on health and safety, for instance, making sure that people get home in the same state they started. They started work, obviously hugely important. Because we do run operating assets, so it's not just a fund in that sense. It's a real asset business where we do run operating assets. The other things that we've just had to do a whole lot more reporting. So TCFD is obviously one that's required for listed companies now, and then the other EU directives, so SFDR and the Article 9 and the various schedules 1, 3, and 5, which everyone will be very familiar with, sadly, in some ways. The scope 1 and 1 to 3 of TCFD, albeit scope 3 seems slightly bizarre to us, but all of that, and then the UNPRI or the SDGs and actually the SDR coming through in this country as well. How do we do that? So I think we've got a lot of focus on that, but mostly it's about reporting stuff that's really good. So it's not a risk in that sense, but reporting is an important thing. Hopefully people will look at us and think, actually, that's okay. And in fact, that's good.
You're 10 years in now, looking ahead to the future. What are your growth aspirations, and how do you hope to realize them through the public markets?
Yeah, so we have never, Lawrence and I have been very clear about this, I guess. We've never wanted to answer a question, I'm going to answer it, but don't worry, about what is your growth target. I think because we are a business where we want to make good investments. And I think for us, if you have a target, that leads to growth for growth's sake, which isn't necessarily good. So yes, we bought 1 in 9 assets, but we've had some years where we bought more than that as a percentage, but in others we bought nothing. So I think growth for growth's sake is a bad thing in one sense. But if you look at our market going back 10 years, it was £20 billion of operating wind farms in the UK. It's now 100. It's 5 times as big. And then if you go through the next 10 years, you've got the same amount billed out offshore. So, it's a doubling, if you like. So if we stayed at the 6% market share that we have, and we're 5-10 places off the FTSE 100 at the moment, that probably puts us up at about 60 in the FTSE. There's a massive if in that sentence. So I think that there's plenty of opportunity. And we're now of a size that we can be significant. We're the 5th largest owner, and all the rest of the utilities in that list, recognised utilities, of which we are to some extent. But we can continue, sitting alongside, co-investing alongside, being a great partner for all of our utility friends and partners, and own assets by ourselves. But because of scale, actually now we can be really helpful in terms of recycling large amounts of capital. So scale is helpful, and it also, I think it means that there's a whole range of different projects then. I think we get into a place where hopefully we can buy assets even more accretively because the competition is sort of slightly less. But it's exciting actually. We've created a business that has done really, really well, and actually as well is just doing a great thing for the country. So it's been fun.
Thank you, Stephen. It's been really interesting to hear about the journey of Greencoat UK Wind and delve a little bit deeper into your listed strategy. And thank you for watching this latest episode of the Be Inspired series as part of the London Stock Exchange. You can watch more episodes like this at www.lsegissuerservices.com/spark.